You know, a lot of people are probably asking right now, what's going on with the market? Where is it trending? So what do you see happening with rates? Like a lot of people are talking like rates are going to go down. But when do you when do you think they're going to go down, and when do you think the market's really going to be affected by that?
Rates. That's what everyone's talking about, and I get it. I mean, it depends what you're talking about. The fixed rates are connected to the bond market. You're starting to see the bond drop, and at this time, you're starting to see fixed rates come down, but not fast enough. With the prime rate, which is connected to the variable rates, Bank of Canada controls this, and right now they don't want to drop it too fast. It's gone up since March 2022 from 2.45% to 7%. Right now, actually, 7.2%. So from 2.45% to 7.2% is where prime sits at. So when you get a variable, oh yeah,
that's pretty wild.
It's crazy. Like all my properties are on a variable right now, so I'm excited to start seeing these rates come down.
So did you take the electric scooter here? Or how'd you get here, bro?
Man, I just Ubered here. Nah, I'm lying. I actually hitchhiked, man. Times are tough. But yeah, no, I think you're gonna start seeing again. Bank of Canada is trying to really get people to stop spending money, and the difficulty is a lot of people who took advantage of the equity in their property in the beginning of COVID when you can refinance at 1.2, 1.3%. They have a lot of money sitting there. So they've been trying to keep and cool down the market because there's such a demand still. They've cooled down the market by increasing rates by as much as they have. But now we're at a point where there's nothing but signs of prime rates start slowly coming down. And once the prime rate starts coming down, well, that gives a domino effect on the fixed rates that are connected to the bond market.
I think they got to come down. I think they are going to start to come down. It's just a matter of when. You know, some people are saying springtime, some people are saying summer, some people are saying not till, 2025. So, I mean, nobody has a crystal ball.
That's what you're asking. You're asking conspiracy theorists.
That's right.
You're asking.
That's right.
Different people will tell you different things. I personally think you're going to see, I don't think the next meeting you're going to see it come down. We had the last meeting last week, and nothing changed. The next meeting, maybe 0.25, but you'll start seeing decreases from June onwards, which is why even with clients, we try to strategize when they're locking into or getting their offer accepted. What route to go? Is it more beneficial to go with a fixed rate, 3 to 5 years, depending on the rate and the lender they go into, or is it more beneficial to get a variable rate? Now, it gets a little more complicated when you go with the variable because there's two different kinds. There's the one where your payments don't change. It's called a true variable. Once prime goes down, then your payments stay the same, but more goes towards principal. Where the other one is called an ARM, adjustable rate mortgage, meaning that once prime comes down, your principal stays the same, but your whole payment goes down.
I thought you were going to say the next one's going to cost you an arm and a leg.
Yeah. Well, we won't even get to that. And the third one